The markets are closed today for Good Friday. The rest of the week was relatively quiet compared to everything we've had going on lately. But we've seen inflation numbers come down a little actually, but mortgage rates haven't really improved yet, which is a little odd since mortgage rates tend to follow inflation. Right now, traders' eyes are on world events, and most importantly, the US-China tariff fight we've seen, which has been driving things. And President Trump continues to publicly pressure the Federal Reserve to cut rates, and we actually saw the European Central Bank lower theirs again this week. But Jerome Powell sounds like he's sticking to his script. Most recently, he said that inflation is the main priority, although they do have a dual mandate to also maintain maximum employment, but he says the job market can't really improve without stable prices. That wasn't exactly what markets wanted to hear, but the mortgage bond market had a pretty good week anyways, slowly recovering from last week's mess, but we're still far from the best levels we saw earlier this month. On the housing side of things, we saw building permits move up, but actual home starts fell, and there's still not nearly enough new supply to meet buyer demand, which is going to help keep home prices from falling and likely help with appreciation. Tariffs and higher interest rates are partially to blame for less building, but on a totally separate note, retail sales came in stronger than expected, likely because people were rushing to buy items before the tariffs kicked in, so future sales are likely going to be weaker than that. But industrial production and capacity were a little weaker as well, which is another sign that the economy is slowing, and that again is good for mortgage rates. And speaking of a slower economy, we've got consumer sentiment dropping again, and it's now at its second lowest level since 2022, so people are really feeling the pinch. And until we see lower inflation numbers, there's positive news on the tariff front, or the economy starts screaming that it's hurting, mortgage rates are likely going to stay around where they are. But if a recession is around the corner, and there are signs, even some experts are saying that we're already in a recession, so until then we could see, we probably won't see rates come down until later this year. But have a great weekend, happy Easter, and we'll talk soon.